Good afternoon, everyone. Welcome to the 26th session of Zentax Talks. Today's topic is one of the most interesting and requested topic that we've got from our side, GST documentation and compliances. So this session is all about your questions and our answers. So do keep posting your questions in the comment section. We'll be answering them. We have also got a list of questions which were sent to us already. So we'll be taking up the questions first, and as you put up questions, we'll be answering those questions. So yes, we have with us Mr. C.A. Arvind Thangam, head of Zentax Clinics. He will be answering all our questions today. I am C.A. Divya Prabha, and I'll be putting up your questions to sir. Yes, sir, over to you.
So extremely a very good afternoon to each one of you over here. So we are extremely thrilled to have you back at the 26th section of Zentax Talks. We will get the session started in another 3 minutes. Thanks for waiting and thanks for joining. We will get the session started in 3 minutes time, please. Thank you.
So let's get started with the first question. I think most of us dealing in goods would relate to this first question very well. The question is, we are a business engaged in the manufacturing of motor pumps. We take part in various exhibitions and workshops where we take out goods to be displayed. So what are the records to be maintained for GST purposes? Over to you, sir.
Yes, so this is a very interesting question and a very practical one where the goods are being taken out for display or exhibition purposes. What is the specific record that has to be maintained, right? So in the previous session, we had already discussed about the various practical aspects relating to e-invoice and e-way bill. With respect to the movement of goods, you would require a delivery challan and an e-way bill. So whenever the goods are moved for the purpose of display at an exhibition or a fair, then in which situation we will have to effect the movement through a delivery challan accompanied along with an e-way bill. But what documents have to be maintained? Coming to this session today about GST documentation. So every manufacturer or every dealer of goods, every registered taxpayer of goods is required to maintain the stock register. So this is being mandated through Rule 56 of the CGST rules. So if we refer to Rule 56 sub Rule 2, we have a specific provision to say that every registered person shall maintain the accounts of stock, and such stock register shall contain 9 important details. So irrespective of the turnover size that you are at, it is extremely important as per the provisions of the GST law that you maintain a stock register. The stock register shall contain the following 9 details. Number 1, the value of opening balance, that is the opening balance of stock, the receipt quantity, the value of supplied quantity, goods lost, stolen, destroyed, written off, or given away by way of free samples, then the balance of stock. So all these 9 items are mandated to be contained in the stock register. So first of it is, there needs to be a stock register which needs to be maintained by every registered taxpayer. And in addition to this stock register, what are the details to be maintained in such stock register is also provided very clearly in section 56 subsection 2. Therefore, whenever the goods are being taken for the purpose of exhibition, that detail, that entry needs to be maintained in your stock register. So that is one of the important documents that needs to be maintained. The delivery challan copy also needs to be maintained, which is also a document which is being prepared by you for movement of goods without, which is not in the course of supply.
Okay. Hope you all took note of the details sir mentioned has to be maintained in the stock register. So the next question is for people who are into imports and exports. The question is, we are a paper manufacturing company planning to expand our business. For this, we are planning to import boiler machinery from a foreign supplier. What are the documents to be maintained by us to comply with the GST provisions and claim ITC on the same? Further, due to our plans to expand, we are looking to export our goods. What other documents should be raised while exporting other than the tax invoice?
Okay, so there are 2 important aspects of this question. That is one, that has been an import transaction that has happened. So with respect to import, how do I look forward to the situation? So with respect to import, you would have paid the tax through a bill of entry. A bill of entry is a document which is generated by the customs department at the time of importation of the goods. So this bill of entry is the document based on which input tax credit can be claimed. See, the documents based on which input tax credit can be claimed is provided for in Rule 36. Rule 36, see, the eligibility of input tax credit is provided for in Section 16, subsection 1. Section 16, subsection 2 provides the conditions for claim of input tax credit. The documentary requirements in relation to Section 16.2 is provided for in Rule 36. This Rule 36, Sub-Rule 1, specifically has a clause D which provides that bill of entry or any other similar document under the customs is an eligible document based on which input tax credit can be claimed by an importer. So therefore, for the boiler imported, right, what the boiler machinery which was imported will be assessed through a bill of entry, and the bill of entry is an important document based on which input tax credit can be claimed. Yes, whether you can claim input tax credit, yes, you can claim input tax credit, but do also watch out the GST and 2B. I think there is one question wherein a person has asked relating to import and 2B linked together. We will talk about that very specific aspect of 2B later. There is also one other facet to the same question raised by the participant, that is relating to the export of goods. So with respect to export of goods, every person needs to raise a export invoice. So whenever it is a supply, export is also a supply under the habit of the GST law. Only thing, it is a zero rated supply under the provisions of the IGST Act. A zero rated supply is a supply for which you would not be paying any tax on it, but you would be eligible to claim a refund. So this zero rated supply can be effected against an invoice, and the invoice shall contain a specific declaration that it is an invoice meant for export, and it can be under two different types. One, which is an export invoice under letter of undertaking, under LUT, or an export which is under IGST paid invoice. An IGST paid invoice is an invoice which is covered under the provisions of Rule 96 of the CGST rules. An export invoice under LUT, which is a refund invoice provided for under Rule 89 of the CGST rules. So coming to the very specific aspect of what is the documentation with respect to export, there has to be a specific declaration given in the invoice as provided for in Rule 46 of the CGST rules. So this Rule 46 very specifically provides that we shall maintain a separate series for the export invoices, and the second proviso, the third proviso very clearly provides that it shall mention whether it is supply meant for export under letter of undertaking or supply meant for export under on payment of integrated tax. So that needs to be very specifically mentioned. Probably we'll take one question also that has been mentioned recently in the chat box now.
Okay, there has been one question from an audience of ours. The question is, sir, one assessing officer issued DRC 01A on 20th March 2023. I have filed reply on 28th March 2023, but there is no order. But today another assessing officer has sent us DRC 01 for the same financial year 1920. Is it allowable under the law?
Right. So the question has been very beautifully drafted to say that though the notice has been issued by an officer, does the officer has superficial powers to issue notice for whatsoever reason it may be, right? The officer is also restricted under the provisions of the GST law, through which or the manner in which he has to issue a notice, the time frame within which he has to issue a notice is all covered within the framework of law. So coming to this very specific question, there was a notice in 2023 itself, March 2023. I filed the reply also for that reply for that notice in 2023. Can there be another notice now in 2024? The notice that was issued in 2023 is DRC 01A. This has been very well brought out by the participant here, that DRC 01A is a notice which is different from DRC 01. DRC 01 is the show cause notice. So DRC 01A, which was already issued in 2023, was already replied for, but the proceedings did not get concluded. The proceedings can get concluded through the issuance of a drop order. So it is better and it is right that we reply to the notice now, that is reply to DRC 01 through DRC 06, and on the satisfaction of the officer, get a drop order in DRC 07, thereby the proceedings get concluded. Is there a specific time limit? Though the question has not been brought out over here, I understand the question to be very specific. Is there a time limit within which the proceedings initiated in DRC 01A has to be completed, or DRC 01 should be followed up? Sir, let me clarify that there is no specific time limit for concluding proceedings once initiated. But there is a specific time limit for issuance of a notice. So the notice time limit for 1920 is still open. So therefore, the notice issued under section, the notice issued in DRC 01 continues to be valid, whether it is under section 73 or under section 74. So the time limit is not linked to the issuance of DRC 01A, but the time limit is linked to the due date of filing annual return. So from the due date of filing annual return, the time limit for show cause notice gets kick-started, and therefore the time limit for issuance of notice for the financial 1920 is still open. Therefore, the notice is still valid.
Hope you got the difference between DRC 01A and DRC 01, sir. And also the time limits for the same as raised in your query. Next, moving on to the next question. All of you dealing in trading would relate to this question. We are in the business of trading hardwares, and we sell to many unregistered persons. What are the mandatory details to be mentioned in the invoices raised for the sale to these persons? And should we mention all these details in every bill, irrespective of the value of sale to them?
Right. So a tax invoice needs to contain various mandatory details which are provided for in Rule 46. So Rule 46 very clearly provides that you need to mention the name, address, and GST of the supplier. If your recipient is registered, then the name and address and the GST number of the recipient. The invoice number shall not be more than 16 digits, including hyphen and slash, which can be contained in an invoice. The date of issue of invoice needs to be specifically mentioned. So there are a set of details which are to be mentioned as contained in Rule 46 of the CGST rules. But here the question is very specifically with respect to a B2C transaction, wherein they have said that it is a sale to an unregistered person. So whenever it is a sale to an unregistered person, then there is one or two important provisions relating to an invoice to an unregistered person. One, I will refer to section 31, subsection 3, which provides that if the value of the invoice is less than 200, then you need not issue single invoices. You can issue invoices in bulk. But this is a trading of hardware, and hardware items less than 200 are very, very limited. So there comes another situation. This is for the minimum cap of turnover less than 200. The next situation is for a situation where the value of the invoice is more than rupees 50,000. So there are some practical situations where a hardware buyer, a hardware seller is selling the goods, say rupees 60,000 against a B2C transaction. So very much possible. So in these situations, though it is a B2C transaction, since the value of the supply is more than rupees 50,000, there is a specific provision in Rule 46 which provides that you need to capture three important things: the name and the address of the recipient. Though it is a B2C transaction, he would have walked into your store and he would have purchased the goods. But since the value is more than 50,000, the name and address of the recipient, what is the address of delivery, the state name and the state code. These are important aspects that needs to be captured in an invoice to an unregistered person if the value of the goods is more than rupees 50,000.
Well, that was very clear and concise, sir. Let's take up another question from the audience. What is the time limit to claim ITC on tax paid under RCM?
Okay. So this is an apt question for the input tax credit eligibility. So tax paid under reverse charge mechanism is eligible for input tax credit. This input tax credit is claimed based on two documents, right? So if it is a tax invoice, if it is an invoice issued by a registered supplier, but the tax on which is payable under reverse charge mechanism. Let's take the example that the service is provided by a security services company. Security services provided by a non-corporate entity to a corporate entity is liable to be paid under reverse charge mechanism by the recipient, right? So I am a recipient who is a private limited company. The security services is issued by a sole proprietary unit. In which situation the sole proprietary unit is a GST registered taxpayer. When he is a GST registered taxpayer, he will issue an invoice under the provisions of GST. He will mark such invoice as liable to reverse charge, yes. He will show such transaction as GSTR 1 and such invoice will be reflected in my GSTR 2B as liable for reverse charge mechanism, yes. When it is reflected as liable for reverse charge mechanism, yes, then I will take input tax credit based on such invoice reflected in my 2B. I will have to make the payment in my GSTR 3B and also take the input tax credit in my GSTR 3B. So the time limit will be based on the invoice issued by my registered supplier. So even under reverse charge mechanism, the important criteria is whether my supplier is registered. If my supplier is registered, then it is from the due date of issue of from the date of issue of invoice by my supplier. If my supplier is unregistered, then what is the document based on which I take input tax credit? That is based on the document generated under section 31(3)(f), a reverse charge invoice. Section 31(3)(f) very specifically provides that if my supplier is unregistered, and the transaction on which is liable to be paid under reverse charge mechanism, then I have to generate a self invoice. Then the self invoice is the date on the document based on which input tax credit is being claimed. Therefore, the time limit will be as per section 16(4), that is before the 30th of November from the date of such invoice. Hope we answered the question to the point.
Yes, sir. Moving on to the next question. I'm sure all of us transporting goods would have faced an issue while transportation at some time or the other. And this is one such question. During the transit of goods, there was some issue with the vehicle and the goods had to be stored in a place near the location of vehicle breakdown. Should we prepare some documents to support the same, or are the existing documents enough?
Right. Right. So during the transit of goods, the goods should not be stored at any other location. See, when the goods are stored at any other location, which is not your principal place of business or your additional place of business, then there is always a chance that during the course of inspection at such premises that your goods are also being detained. So to protect yourself, here the specific question is there was some issue with the vehicle. Whenever in such situations, let us adopt a very practical approach. The law does not provide for this very specific situation. We have one specific provision in law, but though I will just counter it with a very practical approach. In all situations, whenever there has been a breakdown of your vehicle, take a proactive step and send across a mail to your adjudicating authority, to your proper officer, indicating that there has been a movement of goods effected by you covered under such and such invoice and such derivative plan, supported duly with an e-invoice or an e-bill. During the movement, there has been a vehicle breakdown and I have extended the e-way bill, or for some reason that I have unloaded the goods at such and such premises, and the goods should be moved further upon once the vehicle is being made ready or on the request of the buyer. In all such situations, take a proactive step to intimate the department, because such proactive intimation very clearly brings out your intention not to evade payment of tax. In all these situations, the fear is about the levy of penalty. and penalty can be very well faced if there has been a proactive initiative to intimate the department about this transaction. So therefore, intimate to the department. Coming to the legal perspective, we have a specific rule, Rule 56, Sub-Rule 6, where they say if the taxable goods are found to be stored at any place other than those declared, then the proper officer shall determine the tax and he shall charge it to tax. Why do we give gap to that such a provision? This is something which was stored temporarily, and therefore we would suggest that you intimate to the department proactively, because due to a vehicle breakdown, we had to store the goods at a temporary location, even if it is for 24 hours. Proactive intimation to the department can save a lot of penalty.
Great, sir. Let us take up another question from the audience. Is e-invoice applicable for a turnover more than 5 crores for an export service against LUT?
Right. So, applicability of e-invoice very specifically covers exports also. People generally assume that e-invoice is applicable only for transactions wherein the customer has a GST number, that is for B2B supplies. No, the law is very, very clear. E-invoice is applicable for both B2B supplies and exports. Therefore, e-invoice is required even with respect to an export transaction against under LUT. Definitely, the answer is very, very straightforward.
All right, sir. Moving on to the next question. The question says, we are engaged in the manufacturing and wholesale of garments. We are incurring freight on raw materials. Should we raise an invoice on the transporter for paying tax under RCM? Also, how to treat the advances received from customers for the sale of garments? Should we raise an invoice on receipt of advance or during the sale? What other details should be maintained to support the advances received?
Right. So here again, this question is with respect to freight. And when it concerns freight, the question has been very specific, that is about payment of tax and reverse charge mechanism. So for payment of tax and reverse charge mechanism, yes, of course, as I already explained to you, if the supplier is registered, then the invoice issued by the supplier will already show that it is an invoice liable for payment of tax and reverse charge mechanism. Such transaction will get reflected in your 2B, and that would be the basis for claim of input tax credit. If your supplier is unregistered, then you would pay then you raise a self invoice as per section 31(3)(f), and that would be the basis for claiming input tax credit. So there is also one more aspect, that is with respect to advance received from the customers for the sale of garments, right? So with respect to advance received, advance received for the supply of goods is not subjected to GST. So here it is about garments. So garments is all about goods. So we have the taxability for advance received with respect to supply of goods is covered as per section 12. Section 12, those contains a provision for taxability of advance. During the year, in the early beginning of 2017, we have a very specific notification which provides the time of supply with respect to goods shall be covered as per section 12(2)(a). 12(2)(b) deals with payment of tax under for the advance received, but section 12(2)(a) is very, very specific that it is only at the time of raising invoice. So therefore, there is no GST applicability on the advance received for the sale of garments. But here the session is all about documentation. Let's not deviate from the session. So with respect to documentation, whenever you have received an advance, you have to issue a receipt voucher under the provisions of the GST law, and that receipt voucher is a document which would be acknowledging the receipt of advance.
Hope you got your question answered. Let's take up another question from the audience. As per Rule 88B, there is no interest when the ITC is in excess. I am understanding the question is the ITC in excess should be checked for a particular month or particular financial year.
Okay. So you have read very beautifully the provisions of Rule 88B, and Rule 88B very specifically explains that whenever you have claimed excess ITC, then the applicability of interest is only when you have utilized such ITC. ITC availed but not utilized, is you do not have the applicability of interest. So with respect to this aspect, it has to be seen on the date of debit in the electronic credit ledger. You need to see every date or every entry in the electronic credit ledger. When the balance in the electronic credit ledger falls below the ITC erroneously utilized, then from that date, you need to take into account and calculate the date of utilization. So we have an explanation 2 to Rule 88B, which provides what is the date of utilization of this ITC. The date of utilization shall be taken to be the date on which the return is due to be furnished, or the actual date of filing the return, or clause B says the date of debit in the electronic credit ledger when the balance in the credit ledger falls below the amount of ITC wrongly availed, right? So when I have, when the balance in my electronic credit ledger reduces less than the balance of ITC wrongly availed, then to that extent, it is immediately treated as utilized. Then from that date till the date of payment, you need to make the payment of interest.
Hope we covered your question clearly, sir. The next question is, I am a dealer engaged in providing services of selling home appliances. I receive goods from the manufacturer of these appliances and sell it to the retailers. How should I maintain my records to ensure proper compliance with GST law?
Right. So here is a trader. So even providing services of selling home appliances. Okay, so I would take this to be a person who is as a trader and a service provider, right? Say, for example, someone is into home appliances. Home appliances, they buy and sell. Say, for example, they buy TV, mixie, grinder, and they sell. And they also provide repair and maintenance services. So in these situations, even with respect to a trader, the stock register is an important document. So a stock register is not a document which is to be maintained only by a manufacturer. So I think the first question also we started with the stock register requirement. So stock register is an important document to be maintained even with respect to a trader, and even with respect to a service provider. He or she, the taxpayer, needs to maintain all the documents like a tax invoice for outward supply, the details of inward and outward supply. So you have these list of details mentioned in section 35 of the CGST Act, right? So section 35 very clearly provides what are the documents that everyone needs to maintain. So going by section 35, what are the inward and outward supply that has happened? What is the stock of goods that you have made, that you have? Then ITC availed details needs to be maintained. The output tax paid and payable. And in addition to which, you also need to maintain the list of details which are provided for in the rules. So you have specific rule number 56, which provides what are the documents, what are the documentary requirements that needs to be maintained. There as well, you have the entire stock register. You need to maintain the document, invoices, bills of supply, delivery challan, credit note, debit notes, receipt vouchers. So all such documents, even for a trader or a service provider, is also mandatory.
All right, sir. Moving on to the next question. Let's take up a question from the audience. In 2017-18, some RCM payable was missed to be reported in GSTR 3B. That was later on reported in annual return at the time of filing in 1920. Can we claim ITC on the same? I hope I understood your question correctly, sir.
Right. So some ITC which was missed to be, some reverse charge mechanism which was missed to be paid in 17-18 was paid in 1920. Let me take that the ITC, that the reverse charge mechanism was discharged through DRC 03, right? So in which situation can I take the input tax credit? So here again, I would really re-insist on the same point that we discussed already earlier. That is, if the service is provided by an unregistered supplier and the reverse charge was paid by you, even with respect to freight, even with respect to security services, if it was or an advocate also, even that would be a situation where an advocate is a registered person. When he is an unregistered person, and the tax is liable to be paid in reverse charge mechanism, you would generate a self-invoice. So 313F, and the input tax credit will be based on such document 313F, and therefore ITC can be claimed. Though it would be disputed by the department, you have a legal ground in such a scenario to claim the benefit of input tax credit.
Right, so moving on to the next question. We are a business operating with multiple branches within the state. Should we maintain the copies of records at every place of business or just in the principal place of business? And should we maintain it either manually or electronically?
Right. So this is one practical question which everyone has. So I have sales at multiple branches. At the sales counter at each branch, I make the sales invoice there itself. So should I maintain the records there at the respective branch or consolidatedly at my principal place of business? So with respect to this question, we have a specific rule. Rule 56, sub-rule 16, which very clearly provides that it shall be maintained at such respective place of business, right? At such respective place of business, you shall maintain the documents of the outward supply, the inward supply happening at such premises needs to be maintained at those respective locations. So I think we also have a proviso, right? Say for example, see, we have section 35 subsection 1. 35 subsection 1 has a proviso which very specifically provides that where we have more than one place of business, which is specified in the certificate of registration. Please note that it is an additional place of business which is mentioned in my certificate of registration. The accounts of such place shall be kept at such place of business. So I have an office, say for example at Chennai, I have an office at Madurai, I have an office at Coimbatore. Then assuming that Coimbatore and Madurai are registered, then the Madurai details shall be maintained in Madurai. If Coimbatore is not registered, then that itself is a non-compliance under the provisions of the GST law. But once it is registered, the details needs to be maintained at such registered place of business.
Right, sir. Taking up a question from the audience. I am filing quarterly returns. I have updated sales invoices in IFF and paid the liability for April bills. But we have received a notice saying that the GSTR 3B has not been filed. What should we do now?
Sir, you are filing IFF, but still you would continue to file your GSTR 3B, right? So, in our opinion, you would have to file your GSTR 3B definitely. There is no second thought that you have to file your GSTR 3B or not. So, you have to take care of your GSTR 3B filing. So, please ensure that 3B is filed, or maybe come back to us with another question on why you have not filed your 3B. We'll complete the live questions.
All right, sir. We'll take up the live questions first. So the next question asked by our audience is, one of my client claimed traveling and mobile purchase for office ITC. Assessing officer has refused to accept this as eligible credit and declared it as ineligible. What kind of proof can I submit to claim the same as eligible?
Right. Sir, if it is completely for business purposes, then of course, see, because why is the officer insisting that it has to be for business purposes? Because section 16 subsection 1 very clearly uses the words that inward supply, which is in the course or furtherance of business. Only and only if it is in the course or furtherance of business, you are eligible to claim input tax credit. And here we have a very specific situation that the officer has come back to say, prove that it is in the course or furtherance of business. Sir, you can submit details to say, sir, I have traveled to this place. There was a potential client over here. Or if that business really converted into an actual supply, I traveled to this place. Here, I have made an actual supply also. Even if it is a potential business, identify names of people whom you could have met there, and substantiate to say that these are potential customers or potential suppliers. Even that will be potential suppliers for which you need to travel for business purposes. So that could be potential suppliers, potential customers, or you wanted to really study the market also. to a potential market also could be there. So the point is substantiate with some written documents to say these are my potential customers. Explain to the officer about the nature of your business. Explain that you are doing such and such product. You are currently serving these customers. You have the suppliers at these regions, and in the course of furtherance of business, I venture into this place, and therefore it is the traveling expense was in relation to my business. Mobile purchase, sir, get a telephone bill, sir. Out of all the telephone calls that a person would have made, at least 90% of the calls would have been for business purposes, and that should be a very straightforward, generally accepted that a telephone is for the purpose of business. But even otherwise, mobile purchase, get a letter from the statutory auditor to substantiate that this expenditure, which is recorded in the books of accounts of the company, a sole proprietorship or a partnership firm or a private limited company for that matter, is an invoice which is for the purpose of business, and therefore it is a business expenditure. Get a letter from the statutory auditor, and I think that should substantiate the case a little better.
All right, sir. Could you please repeat what should be mentioned in export tax invoice? One of our live audience wanted to.
Yes, sir. Right. So that's a very specific question yet again. So we have rule. We have section. We have rule 46 of the CGST rules, and this rule very specifically contains a proviso. This proviso says, provided that in the case of export of goods or services, the invoice shall carry an endorsement of two types. One, supply meant for export on payment of integrated tax. Supply meant for export on payment of integrated tax, or supply meant for export against letter of undertaking. So these two, any of these two declarations has to be mentioned. And in addition to this, it shall contain the name and address of the recipient, that is my foreign buyer, the address of delivery, the name and the country of destination. The name and country of destination. So these are some of the very specific aspects that are need to be captured in an export invoice. So I will put up this answer. For the benefit of all audience to be seen, right? Right, so that people can really view this answer. Can I answer this specific question? Yes. So I've answered this question so that everyone would be able to see the answer as well. The original text from the legal provisions has been mentioned over here, right? There are two specific answers to this. I'll put both the answers over here that can be viewed, right? That was a question by Mr. Hemant, and I mentioned the detail in the chat box.
Hope you've noted down the details, sir. And the next question is about export again. With reference to the export sales, do we have to mention separate invoice serial numbers for export sales with IGST payment and export sales under LUT?
Right. So, as I already told you, the invoicing series can be in one series or in multiple series also. Definitely, it is advisable to have multiple series for an export transaction, right? But of course, so because the law very clearly talks about an invoice not exceeding an invoice serial number not exceeding 16 characters in one or more multiple series, right? So for an invoice, it is generally better to have a separate series, but there is no specific requirement under the law to maintain a specific series for IGST paid export and an LUT export. Manimaran sir, hope your answer is clear. You can follow the same series for IGST paid export and an LUT export. Say, for example, the invoice number is 100 for an LUT export, 101 can be an IGST paid export also.
Okay, sir. The next question from our live audience would be.
Dhananjaya sir, we hope we answered your question. We will just come back to your question once again if it is not yet answered. Right? Okay.
The next question is from Mr. Durairaj. The question is, inward supplies e-way bills are not generated a notice has been issued from the department. What should we do about it?
Sir, who is the responsible person for generating an e-way bill? E-way bill has to be generated by the person who is causing the movement of goods. So in a situation where you have not effected the movement of goods, then you are not responsible for generating the e-way bill at all. So therefore, take each of the transactions, each of the purchase invoices, all the invoices on which you have claimed input tax credit, number one. Segregate it into, it is an inward supply of goods or inward supply of services. Inward supply of services, e-way bill not applicable. Inward supply of goods. Inward supply of goods, go through each of the purchase invoices and the purchase orders given for each of the purchase invoices. Your PO would have mentioned whether you would take the delivery of goods or the delivery of goods to be effected by your supplier. If the PO contains that specific condition that the delivery of goods to be effected by your supplier, then substantiate that document to the department to say that you are not the person to effect the movement of goods. It is the responsibility of the supplier. Therefore, non-generation of e-way bill is not a non-compliance or lapse on your side. Duraraj sir, hope we answered your specific question on this subject.
Moving on to the next question. There is a general question. Can we claim refund on export of services? Yes,
definitely. Export of services is also a zero-rated supply under the provisions of the GST law. Rule 89 very specifically provides that you can claim a refund for the export of services also.
The next question is related to our topic today. Do we have to document hard copies of all the ITC availed bills separately, or could we maintain it as soft copies?
Right.
Instead.
Right. So hard copy maintenance of invoices or soft copy maintenance. Yes, of course, this is a very common question. So the invoice needs to be maintained, which is the evidence based on which input tax credit is being claimed. Right. So all ITC invoices, Rule 36 very specifically provides the documentary requirements. It's an invoice or bill of entry or various such other documents which are provided there. Here the invoice needs to be maintained. But we have very specific provisions in the law. Rules 56 very clearly provides that the electronic records can also be maintained. But whenever it is an electronic record, it needs to be authenticated by a digital signature. So when the invoice is issued by your supplier through against a digital signature, then it is satisfactory that you maintain such ITC invoices in digital format. But if it was already a physical invoice, then it would be important that you maintain such invoice in physical format only.
Great, sir. Moving on to the next question. How to generate e-invoice against export with or without payment of tax in e-invoice offline tool. That is format A.
Yes, Sharath. So Sharath has raised this question. Sharath, this is a very procedural aspect of things. One thing which we can definitely very confidently tell you is definitely e-invoice is applicable and e-invoice can be generated. Please drop in your mobile number, Sharath. We will immediately get in touch with you through an online call to assist you with the generation of e-invoice for an export transaction. Definitely, it can be generated. So I understand there is some practical difficulty in filling up the e-invoice format. We will assist you immediately after this call. Our support team will be immediately reaching out to you, Sharath.
As sir mentioned, please forward your number to us, sir. We'll get back to you on the same. The next question from our audience is, if a client should generate e-invoice, but they have not generated till now, can we generate it now? Is it possible on 1st August? There are 23 invoices. Have I got your question correctly?
Right. So, right. So, a registered taxpayer for whom e-invoice has been made applicable from the 1st of August 2023 but has failed to generate e-invoices till date. Can he generate e-invoice now? Yes, the e-invoice portal still allows generation of e-invoices even when you have missed e-invoices for the past period. Only for those dealers whose turnover is more than ₹100 crores, there is a time limit restriction in the portal itself. But since, or if your turnover is less than 100 crores, then no worries at all. Please go forward and generate e-invoice now.
Hope we've answered your question, sir. The next question is, orders are cancelled by the buyer while goods are moving to the consignee place. What can we do to cancel the invoice?
Right. Sir, invoice generally adopt this method, sir. Whenever the invoice has been generated, don't cancel the invoice at all. Always put a credit note. That's the best approach. Or in very extreme situations where you generated the invoice today, and on the same day, before the movement of goods, you notice that there was an error, then you can go to cancel the invoice. But in these situations, this is something which is called as an unfructified sale. Called as unfructified sale. So this unfructified sale is a concept which is there from the pre-VAT regime. So if we take the case of Tamil Nadu, VAT was enabled from 2007. But in the pre-VAT regime itself, we have this concept of unfructified sale. That is, we have sent the goods, but the customer has not taken delivery of the goods. So in all these situations, you generate for returning back the goods, you generate a delivery challan and you get back the goods with an e-way bill. You need to cancel the invoice? No, you need to generate a credit note for cancelling for offsetting the invoice already raised.
Hope that gave a clarity to you, sir. The next question is, can an employer claim ITC on term insurance premium paid for their employee? It is term insurance and not health insurance.
All right, okay. So, though we are deviating a lot from the subject for today's discussion has been primarily relating to documentation. But of course, these questions are important for our audience, and I understand that's the reason why this question has been asked. So, Section 17, subsection 5. Section 16 says you can take input tax credit on all inward supply of goods or services. Section 17, subsection 5 very clearly provides a list of blocked credits, under which we have Section 17, 5B, which says that ITC cannot be taken on life insurance and health insurance. Section 17, 5B very clearly provides the following supply of goods or services or both, and has a very specific entry of life insurance and health insurance. Therefore, a term insurance, which is also life insurance, you are not eligible to claim the input tax credit, but that is a proviso, which goes to say where it is mandatory for the employer to provide such services, where there is a mandate under any of the provisions of any other law which says that life insurance has to be taken for the employees by this company. Some companies mandated to take life insurance for their employees, then ITC would be eligible. In all other situations, life insurance will not be eligible for ITC.
Moving on to the next question. If items are to be sent to overseas exhibition, do we need to add it in our RC as a place of business? If so, please guide us. Sure, sir.
Karthikeyan sir, definitely very interesting thing. Right. So let's add a place which is outside India in our GST registration in India. So definitely not required when goods are being sent to a place outside India, or any place outside India cannot be added as an additional place of business in India. So therefore, that would not be required whenever it is going for the purpose. Do follow the due provisions under the provisions of customs for removing the goods for temporary export and bringing back the goods. Don't claim any of the export incentives under this situation.
All right. So the next question is, our MD is running a Kalyana Mandapam under family trust. Can we know what are the mandatory documents to be maintained for GST?
Right. Okay. Sir, I assume that you are registered for GST. Therefore, even though you are a trust, you are an assessee under the perspective of the GST law. But here, being a Kalyana Mandapam, you are a service provider. So being a service provider, you need to maintain the details of outward supply, the input tax credit that you claimed. So the input tax credit invoices, the details of inward supply, the tax payable, the output tax payable, and the paid amount that needs to be separate registered. Then you need to maintain all the documents, your tax invoices, outward supply tax invoices, your input tax credit documents, debit notes, credit notes. Suppose you are giving some discount, supposing you are raising additional amount, then debit note, credit note, all these documents need to be maintained.
The next question, I think this is a follow-up question. Sir, GSTR 3B will be filed after the quarter, that is April to June, will be filed after June, or do I have to file monthly even though I opted for quarterly?
Yes, sir. Sir, you have to file monthly, sir. The only option is that you can file your statement of IFF and the GSTR 1 will be quarterly, but this has to be filed on a monthly basis. 3B has to always be filed on a monthly basis.
Hope we've got your question covered, sir. The next question is IGST tax paid against bill of entry at SCZ vendor location dated 30th March 2023. It was accounted on 2nd April 2023 as on date. Okay, as on date, IGST amount is not reflecting in GSTR 2B. Can we take IGST tax credit as on date? Then we
Right.
had this question to be followed up. Thank you for asking this question in the.
So I think some offline person also sent us this question. We have the same question in the live portal also, right? So the point is, so the time limit, this is with respect to, there are two important aspects to this entire question. One, with respect to the documentation, the documentary requirement for claim of input tax credit, that is my bill of entry is not reflected in my 2B. Still, can I take input tax credit? Yes, because Rule 36 sub Rule 4, Rule 36 sub Rule 4, which requires that ITC can be claimed only based on 2B, and also Section 16(2)AA. Section 16(2)AA, which talks about an invoice or a debit note which is under Clause A. Shall be furnished in GSTR 1, communicated in GSTR 2B only based on which input tax credit can be claimed. So Section 16(2)AA, 36(4) all talks about invoices issued by the supplier in GSTR 1. But here we have a situation which is with respect to bill of entry. So for a bill of entry, 2B is not the mandate. 2B is not the mandate for claim of input tax credit. Very similarly, following up with respect to Section 16 subsection 4, that is with respect to the time limit for claim of input tax credit. Section 16 subsection 4 very specifically talks about invoice or a debit note and does not talk about any other document. See, when you go to Section 16(2)A, which talks about he is in possession of an invoice, a debit note, or such other tax-paying document as may be prescribed. So the time limit is applicable only for an invoice or a debit note, and Section 16(4) does not talk about any other document. So therefore, with respect to a bill of entry, yes, you can take input tax credit. It should not be restricted. Definitely, department stand might be different, but the legal interpretation, reading the very, very fine interpretation of Section 16(4), you can very strongly contend to say that time limit is not applicable with respect to bill of entry.
We've answered the question legally, sir. The next question is regarding how to rectify GSTR 1 filed with wrong tax invoice. Invoice not related to them.
Okay. So you can amend the tax invoice. That is one option that you have, or you can issue a credit note and issue and re-enter the invoice again. So two options, practical options. Rectify GSTR 1 means that is there is a B2B invoice which has been given for which the GST number was incorrect, the tax value was incorrect. Then you can amend such invoice. If you are not able to amend it, issue a credit note and issue a fresh invoice.
The next question is, I'm not sure if I get the question properly. Any chance to penalize officers, sir?
Right. So there was. So I think it is a follow-up question from Muthukumar for some other answer that we have already told him. So to penalize the officer, so there has been some very rare instances where even the officer has been penalized. I think in the previous session or some of the previous sessions, we were talking about one of the Supreme Court judgments, the case of Satyam Shivam papers, where the matter went up to the Supreme Court. There was an issue of levy of penalty for movement of goods with an expired e-way bill. The e-way bill got lapsed, and immediately on the same day, the vehicle was intercepted, for which the department and the officer was made to pay penalty. So very exceptional situations we do see where the officer has been made applicable for the payment of penalty. But any chance to penalize the officer, sir, I am not really the... and I think this is not the exact forum where we would be able to answer that question.
All right, sir. I think we'll take up a question that we've got to our mail. I am a new godown owner. What are the details to be maintained by me to ensure compliance with GST?
Right. So with respect to a godown owner, yes, of course. So this is with respect. So someone who's maintaining a godown, Yes, of course, even then they are obligated to maintain. Sir, a transporter is obligated under the provisions of GST law. Very similarly, a warehouse operator or godown owner is also required to maintain such number of documents, right? So with respect to a godown owner, he needs to maintain who is the consignee, who is the consignor, what is the goods that he has received, what is the period for which it is remaining in the godown, when it was dispatched, the movement, the item-wise, owner-wise details needs to be maintained by the godown owner also. So there are very specific provisions in the GST law which provides that what are the documents that are need to be maintained by the godown owner. And thanks for bringing out this question, which really enlightens everyone about such mandatory requirements even on a godown owner or a warehouse operator. So these are people who generally assume that, sir, I am not generating any document, I am just facilitating the movement. But even in such situations, Rule 58 of the CGST rules very specifically provides that these specific documents needs to be maintained. We'll complete these questions here. Logistics, service, freight, and document charges. Okay, I'm not sure how is that. I think that's related to another question. We'll come back to it later.
In the year 1920, IGST amount in invoice has been claimed as CGST and SGST credit. During audit, the officer disallowed the CGST and SGST claim. What should we do now?
Right. So, sir, there are two different situations where something that is when I paid some a tax on tax which was liable to be paid as CGST and SGST, I wrongly paid as IGST, or I took also ITC erroneously. So when I have paid the tax erroneously, that is outward supply, when I paid the tax erroneously, we have section 77 of the CGST Act and section 19 of the IGST Act. So I had to pay IGST, I paid CGST, SGST, then I can repay that amount and I can get back that amount as refund, what I originally paid. That is provided for in section 77 of the CGST Act and section 19 of the IGST Act. When it comes to ITC, which was claimed under the wrong head, we can take the benefit of Circular 192 issued in the month of July 2023. So this Circular number 192, which was issued in July 2023, is relating to not this direct aspect. So here the question was raised by Bhaskar. So Bhaskar from Mysore. Yes, Bhaskar. So this question, you can take the benefit of Circular number 192, read the finer provisions of it to say, yes, Circular 192 of July 2023, which goes to say if IGST, ITC was to be claimed, but I claim CGST, SGST, then I am not applicable for I am not applicable for interest. So you can only claim that you are not leviable for interest, and that can be contested by referring to Circular number 192. If you have a very specific disallowance on this aspect, we would be happy to look into that specific notice and advise you.
Coming back to our topic, the next question is about how to generate e-invoice in offline tool against export with payment or without payment.
Yes, Sharath, again the same question. We will definitely get in touch with you for this question, Sharath.
Okay, the next question is a very important question. Can I know how long do I need to keep the documents in hand as per GST law?
Right. So thank you, Shajimon, for bringing out this question. As per the provisions of the GST law, accounts and records need to be maintained for a period of 72 months. For a period of 72 months, that is 6 years from the due date of filing annual return. Right. So the date of filing annual return for 17-18 was in the month of February and March 2020. Sorry, February 2020. So from February 2020, you need to maintain the documents for a period of 6 years. That is for 17-18, you need to maintain the details documents at least till February 2026. For 18-19, thereupon, so even for 17-18, the department has every right to check those documents.
Hope it's clear, sir. The next question is there any circulars or orders for exempting B2C from e-invoices?
Yes, sir. So with respect to applicability of e-invoice, e-invoice as per the notification itself is applicable only for B2B transactions and exports. This is because of notification number. 1 second, let me just give you the notification number also very clearly. Notification number 13/2020. So notification number 13/2020 issued in the month of March 2020 very clearly provides the transactions for which e-invoice is applicable. So e-invoice is applicable for both supplies to a registered person and for exports. So this is provided notification number 13/2020. So therefore B2C supplies is not covered. This is with respect to e-invoice as provided for in Rule 48 sub Rule 4. For a B2C supply, there is a specific provision, and there for associates having turnover above rupees 500 crores, there is a requirement of displaying a static QR code. QR code, not an e-invoice. They did not generate an e-invoice, but a QR code needs to be displayed. So that is contained in a specific provision, but an e-invoice is not required for for a B2C transaction.
Great, sir. The next question is a specific question from Vijay Raj, Mr. Vijay Raj. Sir, we are selling sarees with actual quantity and actual rate, but without mentioning design name in e-invoice. However, actual invoice is having design name. We intend to hide it for business competition.
That is perfectly okay, sir. That is perfectly okay, sir, because on a very practical perspective, based on the HS and also you can enter the details there, and therefore this is good. This is good. You can proceed forward.
The next question is from an insurance or mutual fund advisor. In 2017, I have taken GST number. Later on, it was cancelled. Insurance or mutual fund houses have deducted GST from my commission. Can I claim refund of GST deducted? If yes, how do I claim it for the previous years?
Sir, for insurance commission, the GST will be applicable on reverse charge mechanism. So, for example, they are saying they are paying 1,18,000, they are reversing that 18,000. They would pay that amount to the government, but refund of such tax would not be possible at all, sir. We will understand this question better. Maybe you send that question specifically to our WhatsApp number. Sir, you can note our WhatsApp number 89039511122. Support team, you can also mention this as a reply to Mr. Guruvel. Guruvel, sir, you can note our WhatsApp number. You can specify this question so that we will understand it better and answer your very specific question.
The next question is, as the time limit has gone for financial year 17-18, is there any possibility that GST department will send notices?
Sir, notice can be issued under the provisions of section 73 or under the provisions of section 74. Under section 73, the time limit is over, as you rightly said, but under section 74, the time limit still continues to be there. Therefore, still the department has the time limit for issuance of notice under section 74.
Deviating from the topic again, but the question is, GST levied on the figures available in P&L account combined for various branches outside state. Is it correct? Kindly let me know the provision.
Sir, definitely not right, sir. Surya Narayanan, sir, definitely that is not right. If you have multiple branches at multiple states, then definitely that turnover cannot be brought into tax in this respective state. Provide them with the copy of GSTR 9 in those respective states so that that turnover is not accessible as turnover in your GST registration of this particular state. So we have another few more questions. Let's just jump on them quickly since we have passed the time of 4 o'clock already.
Alright, so the next question is, what are the procedures or documents required to apply for refund on export invoices filed with LUT for last 3 financial years? That is from 21-22 to 23-24.
Right, let me make it very clear that the time limit for filing refund is 2 years. So filing of refund for 21-22 at this time would not be possible. There was an extension due to COVID, but even that extension is now over. Therefore, refund application can be filed only for a period of 2 years. And the procedures or documents, yes, of course, that's a separate discussion altogether. But the refund has to be made under the provisions of Rule 89. Number 1, with respect to export, you need an export, the export and the shipping bill invoice, the shipping bill details, the export invoice details, the shipping bill details. You would also need the details of your, right? So the export details, shipping bill details, Then, of course, the details of your input tax credit, which is matched along with your GST or 2B. So these are three important details which would be required for filing of a refund application. Yes, Manuja, we will definitely get in touch with you to guide you on this specific aspect. So you can note the specific question support team, please. Thank you.
So the next question is, we are a trading company. We supplied the samples to interstate client through delivery challan and e-way bill. When the sample gets approved, we raise the e-invoice mentioning the same e-way bill. Is the practice correct?
Yes. So this is something which is called a sale on approval basis. With respect to sale on approval basis, yes, you can send the goods against a delivery challan. On approval, you can raise the invoice. But one important condition is that invoice has to be raised within a period of 6 months from the date of delivery challan. From the date of delivery challan.
Hope we've answered your question, sir. The next question is how to generate an e-invoice for export of service. Service belongs to ship freight and document charges, etc.
Yes, sir. So for export of service also e-invoice can be generated. So I think there was one other person who had a difficulty with respect to raising of e-invoice for exports. So we will definitely reach out to you and support you on the practical aspect. Sharath, I think Sharath had asked a question with respect to raising e-invoice for exports. Generally, we have Ms. Vamsi who has also raised a question with respect to very specific question on export of service. We will definitely get in touch with you and support you to raise an e-invoice for export of services.
All right, sir. Reach out to us. We'll be sure to clear your doubts. The next question is, sir, we are giving job work. While receiving the goods, the e-way bill was given by job worker for labor cost alone. Is it right?
No, sir. This is definitely not right. The e-way bill has to capture the value of the goods and not the value of service.
The next question is it mandatory to file ITC 04? What happens if I don't file from 2017 to 2024?
It is 100%, 200% important to file ITC 04. If ITC 04 is not filed, the goods taken out for the purpose of job work will be deemed to be a supply and you would be liable to make payment of tax for the entire value of goods sent out for job work. That's a very huge amount. So make sure to file GST ITC 04, which is the return of job work, which is a very, very mandatory document because ITC 04 is the intimation to the department for sending out goods for job work. Without such intimation, it would be deemed to be a supply and you would be liable for payment of tax.
The next is a very specific question from Mr. Manimaran. How to file GSTR 10?
Sir, GSTR 10 filing, yes, it is the final return. GSTR 10 filing is a mandatory requirement. If you don't file GSTR 10 also, you would be applicable, you would be liable for late fee. Penalty can also be applicable. So whenever you are surrendering your GST registration, then definitely you are required to make the payment of, you are required to file your GSTR 10, which is your final return.
The next question is, we are sending lorry with goods for weighbridge and return. To know the kgs for preparing sales invoice, what are the documents needed for this?
Right. So whenever goods are sent for the purpose of weighment, then you need to raise a delivery challan with an approximate weight and an e-way bill, which also shows the approximate weight. So we have a very specific provision here. I will read the specific provision with respect to movement of goods for the purpose of weighbridge. Right. We will take up the next question in the meantime. I will answer this very specific question now.
The next question is, my client made a purchase from a supplier in the fiscal year 18-19. The supplier filed 1 but did not file 3B. My client made an immediate payment to the supplier. Recently, the tax department issued a notice to my client demanding payment of the tax along with interest. Additionally, the supplier's registration was cancelled suo motu by the tax officer. In another instance, a different supplier's registration was cancelled before making a supply to my client. How should my client handle this?
Right. So, sir, it is important that the supplier makes the payment of tax, and at this situation, Section 16(2)(c) very clearly provides that the supplier needs to have made the payment of tax for the claim of input tax credit. Right. So that is a very specific requirement where the supplier has to make the payment of tax. But you raise an issue to the supplier number 1. Keep fighting with the department. There might be some resolution which is provided later. But at this situation, we would say that it is better that you take it up with the supplier that he has not made the payment of tax for the situation. Sir, with respect to payment, here I am bringing to you one specific rule, one specific provision in Rule 138. Rule 138 is the rule which requires the generation of e-waybill. Rule 138, sub-rule 14 has a specific situation where e-waybill is not required. Rule 138.14 talks about situations where e-waybill is not required, and here we have a specific situation where it is moved for the purpose of weighbridge. So whenever it's going for the purpose of weighbridge and back to your place and back to the principal place of business, then it can be accompanied only by a delivery challan. Only a delivery challan is sufficient. You need not generate an e-waybill at all. You need not generate an e-waybill. Condition is that weighbridge should be within a distance of 20 kilometers.
Hope we've answered the last two questions very clearly. The next question is it mandatory to claim GST input only up to the bills uploaded in GSTR 2B? And if we have tax invoices with us, but the vendors have not uploaded invoice in GSTR 1, still we are not eligible to claim GST input.
Yes, very, very clear. So Manuja, now we have section 16(2) AA of the CGST Act, which provides the legal mechanism that only when the invoice is reflected in 2B, you would be eligible to claim input tax credit.
Wait, the next question is, sir, we are giving job.
That is answered.
The next question is there any chance in upcoming financial years for filing of revised return of GSTR 9 or 9C for the previous financial year?
Filing of revised returns, sir. GST has never come out with filing of a revised return, so I don't really see a situation where there could be any filing of revised return. So I don't really see that situation for the previous years. For the upcoming years, there could be a situation where the GST Council may decide that to be, but at the present moment, as far as we could answer from Zentax Clinic, that I don't really see a situation of we be able to file a revised return.
All right. The next question is, we are receiving the government services like inspector of factories, pollution certificate, etc. Is it liable for RCM? So
we had questions all across from different topics, though not very directly related to documentation and complaints. So I think we have some more questions also. So some more questions I think which we had received earlier, which are still not yet answered. We will take up more questions definitely in the upcoming sessions. So we will have one more repeat session on GST documentation and complaints, one repeat session wherein we would take very specific questions on documentation and complaints. So there are n number of questions which still remain unanswered. Definitely we will have one repeat session for answering those various questions which we have received but which are still not yet answered. So answering this final question for the day with respect to reverse charge mechanism, Inspector of Factories pollution certificate, yes, it is subjected to a legal interpretation. Under a legal interpretation, there are grounds to dispute the levy of GST with respect to pollution control or the Inspector of Factories. Also, there are legal interpretations, but at the time of audit, this is a point for which the department is definitely proceeding for levying tax under reverse charge mechanism. So it has been a very fantastic session with so many questions. The audience has been very engaging. So we look forward to more upcoming sessions. You do post us with our questions. So there has been very many number of questions in the offline that we have received, which we could not really take up. You send us your questions beforehand in the offline manner so that we will be able to take it forward to you. You let us know your feedback on this format of sessions, wherein we are taking up your questions and coming up with our answers so that it directly answers the various practical questions that you have on a very day-to-day basis. You come back to us with your feedback that can really help us to take these sessions forward. So we will have a repeat session on GST documentation and complaints in the next week. We look forward to have you all at the upcoming sessions as well. So if you have any clarifications, do get in touch with our support team. Do use the features of Zentax 2.0 portal to check for GST notices. So these GST notices can be viewed in a single dashboard. If you have any difficulty there as well, you do get in touch with us, number one. Number two, we have launched a unique product of GST Assured, which is a fixed fee plan for the various SME and the corporates. which can provide on a fixed fee basis the replies to the various notices and also a proactive complaints check. So all these are provided as part of a fixed fee plan. Do get in touch with us at our WhatsApp number to understand more about what GST Assured and how GST Assured can really help you. So if you have any other questions, do get in touch with our support team and we are always ready to answer your questions. We look forward to have you all at the forthcoming sessions. Thank you all for being here.
Thank you all.